Hello, everyone. What is it that we want to talk about? What we want to talk about today, we want to talk about what happened to the job market last week, and more importantly, what is going to happen next. There's a lot of things happening, and let's go through it to make sure we have a good understanding.
Take a look at the market reaction to this ADP print we got. Of course, initial jobless claims coming through as well. At this point, I don't know what would be good news for the market at 8:30 a.m. tomorrow. What would be the best possible print to actually maybe breathe some life back into the bull market?
So I do think that it's hard to know what is going to please this market. To your point,
that is exactly the point. What is going to please this market? No one knows. No one knows exactly what is needed. All we know is the market is all nervous, the market doesn't like what's going on, and the market wants to know more.
We have half the folks looking for a weak number that pushes Chair Powell to go 50, and the expectation is that that's the good news. Alternatively, you have half the folks saying, look, if we're really going to get a soft landing, that means a slow Fed and a stable labor market where.
Okay, that's kind of what I've been saying all along. But anyway, when they say half the folks, what do you mean? Did she do a survey? I don't think so, right? So because speaking in her mind, she really doesn't want to come across. It's Morgan Stanley. She doesn't want to say that this is a good thing, a bad thing, right? But at the end of the day, what she's saying essentially is that if they do 50 bips, it may view that, oops, we are in trouble now. So you may not even get an unemployment number. You may not even get an unemployment number. You may get just a Fed saying, you know what, I'm not going to do 25, I'm going to do 50. They're going to say, oh, so we are in a recession now, aren't we?
Consumption holds up. So look, we're in the soft landing camp. We're looking for a solid job.
Anybody with any brain, I think, would say, like I say, and like Morgan Stanley say, that we are in a soft landing. Right now, based on the number that we're seeing and all indication, and in terms of history, we are on the camp of the soft landing.
Creation number, hopefully we come in right at the consensus, and that means a market that starts to broaden, right, and suggest a Fed that is going to be measured and go somewhat slowly. That
measured will go slowly, because one thing you do not want the Fed to go loud and fast and speedy and strong. Because it's going to get, this is serious business, people. This is serious. This is gonna upset a lot of people if it goes too fast.
May not be great, for some of the tech high flyers, which have started to swoon a little bit. But it should be, decent news for, the core of the market in financials, industrials, and energy stocks, for example, that should do well if we get this slow and steady, moderate soft landing.
So basically, we want a slow, moderate, soft landing. But I mean, this is what we're getting. We're getting a soft landing. The issue is, what's really going on behind the scene? I mean, we're kind of all realizes that this is not a recession. Now, of course, lots of people talk about it all the time because you get more views by saying the world is going to collapse. But the most sensible people, like myself, and Morgan Stanley and my friend Yardeni and Lostock and all these guys and women, basically we're saying this is soft landing, people. This is soft landing. But now, not only we want to see it in the numbers, in the economic numbers, my concern is now we want to see it as well with the Fed and the way they react. Keep that in mind. If they do 75 basis points, the market crash.
landing.
Lisa, what about a slow and steady rate cutting cycle? At the end of the day, there are a lot of doubts that are hanging around that a 25 basis point cut, or even 2, or even 3 for that matter, in the next, let's say, 3 to 6 months, would make much of a dent in then moving some of these consumption numbers forward, given the weaknesses you're already seeing in the labor market. How much do rates need to go down to really stimulate the economy?
Not too fast and not too much. Forget the economy. The stock market is what counts.
Yeah, so this is, I think, one of the biggest controversies because, this has been an economy where higher rates have had an impact, or the rate-sensitive parts of the economy have been much smaller than historically and very concentrated. And so the question of whether a slow and steady Fed or a soft landing Fed is going to help housing, whether it's going to help small businesses, whether it's going to help the low-end consumer, whether it's going to help commercial real estate, I think the jury's out on that. And what that might mean is if we get a soft landing, we have a mix in the market that's very similar to what we've had over the last couple of years, and small caps don't catch up, and we don't see a big cyclical trade, if you will.
Next, let's see what the White House says about those numbers that are very soft. Now, keep in mind, this is important. Keep in mind, this is election year, right? So we got to be extremely careful what we're saying. If you appear to say that the economy is slowing down, that's not good for the Biden administration, because the Trump people are going to say, you see, and they didn't manage well. And keep in mind that most of the time, very rarely do a president gets elected, an incumbent president, specifically if you have a problem with the economy. Remember Bush Sr. So be very careful. Now, obviously, let's see what the guy over on the White House lawn says about those numbers. Watch how they do it. It's very, very, very good.
Downward revisions for June and July. What, in your estimation, then, will be the final number for August?
Well, August sometimes comes in below what it is then revised up towards.
Okay, so he's already saying, well, the number might be low, but don't go crazy on that low number. In fact, the number was 142 versus the expected one that they wanted 165. But he says, but you know what? Don't because it gets revised anyway, which goes back into this thing that I keep telling you all the time, is that we are waiting in bated breath, trying to make money, trying to invest, but based on information that we might not even have. The information is not even correct. The information gets revised. So all we're playing with, we're really playing with emotions and perception, and we don't even know what's really going on in the real reality.
That's been kind of a pattern, so we may do a little better on that. But that's one of the reasons why you want to take a moving average of these numbers. If you look over the past 3 months, you're at 116,000 jobs per month. Now, that's definitely a downshift from where we were. We knew the job market was cooling. I think the important...
Okay, so at least he admits we are cooling. Obviously, he's not going to tell you we have a recession.
An operative question today, whether you're a markets analyst or whether you're trying to figure out where the macroeconomy is going, is what's the break-even level of job gains?
Okay, so basically, don't tie me up to one number. We got to kind of look at the whole number. We have to do a moving average. Let's look at the average of today, yesterday, the month before, and the month before that. And then we have kind of a fear. But the fear is, I'm slowing down. But I'm not having a recession. Obviously, otherwise that wouldn't be good for my boss, who's the president of the United States, and who needs a strong economy to show that they're able to manage this process. But obviously, he can't just lie and say everything is great. So he's going to use the word that everyone is using, which is soft landing. soft landing?
From the payrolls. That is, what is the level consistent with a stable unemployment rate? Well, we know that unemployment ticked down 1/10 in August. That was good to see. And I've seen break-even rates that basically range from...
He's basically saying the unemployment rate went from 4.3 to 4.2. So unemployment is going down, actually.
100K to 200K. I'd say right now, probably the trend in payrolls is at the lower end of the break-even range, but it's not outside that band yet.
Okay, so if you don't think it's outside the band of what would be considered normal, perhaps not reason to be gravely concerned. Jared, are you concerned? And I'm not going to ask you what you actually think the Fed will do in 2 weeks' time, but if they do...
Well, obviously she can't ask this, right, because he's from the government. But she's saying, so you're not concerned, basically.
Opt for a larger rate cut. Are you worried that might send a signal that the economic circumstances the country finds itself in currently are more dire than the picture you actually see?
No, I wouldn't. I mean, I think if we think about...
So the big topic right now is if they lower the rates too much, that means that we have a recession on our hands. Don't you think that if they lower the rates too much, they're going to put us in? That means that the Fed thinks we're in risk. When I mean too much, we're talking maybe 50 bips. If they do 25, we're okay. If they do 50, some people think that this will be a signal that we are in a recession. After all, doesn't the Fed know what's going on in its own economy? Let's see what he says about that.
The economic conditions of the country, starting from the top down, we look at GDP growth. Okay, so GDP growth in Q2, 3%. In Q3, the current quarter, we're tracking north of 2%. Think of trend at maybe around 2, maybe a little bit below. So that's a half a year with GDP at or above trend. We have, as I said, I think job growth that has been consistently solid, slowing, yes, but still probably within the band of what are credible break-even levels. That would be enough to keep the unemployment.
So blah, blah, blah. Basically, I mean, folks, everything is okay.
Moving down, and in fact, that's what we saw in August. Of course, it ticked down. Strong labor supply, as Acting Secretary Sue said, but also rising real wages. That's one of the reasons why consumer spending has been so.
I mean, it's not a political speech, but it's starting to sound like one. Everything is fine, guys. There's nothing to see. Keep moving.
Solid. 17 months in a row of year-over-year price inflation growth beating price growth, and that's a big, and that kind of takes you down to the macro level of the paycheck with more buying power.
So basically, saying, you know what? Even if they actually do 50 bips, it doesn't mean we're in a recession, because I could look at the numbers. The numbers are good. The thing is, they're all relying on the current numbers, which is correct. The other folks on the side of the track basically saying, yeah, but you're not seeing what's coming up next. There is a recession coming. The thing is, where is it? And you won't see it until a year from now, unfortunately. So now let's take a look at my friend Yardeni, right? Yardeni, obviously, he thinks like I do, that this is a soft landing, and we don't have a recession. Now, the point that I'm going to try to make is that what's going on here is that the market is like a baby, and the baby wants rates to come down faster. No, why is that? Why is that the baby wants to cry, and why is it that we want lower rates right now? Let me show you what he says about that.
Oh, that's for us, that's the Seinfeld yada, yada, yada. We've been telling that story for a couple of years now, and it's been working well because we've been pointing out that we're not having a crisis this time, so we're not having a credit crunch, so we're not having a recession. Also, recessions can be exacerbated or maybe even caused by surges in oil prices, and so far that hasn't been happening either. And that's because the global economy is relatively weak.
I mean, the point he's making is that for you to have a recession, it just doesn't come up because you want a recession. It doesn't come up because you think it's going to happen. something major has to happen, right? You had the recession in 1990. You had a recession in 2008, and you had one in 20. But these were big issues happened during that period. But now, what do we have?
Jackie's written about China, and China still looks awfully weak, actually. Europe is barely growing, so that's keeping commodity prices down. So far we haven't had a recession, but there is this widespread perception that
now he's going to get into it. You know, why is it that we want so many rate cuts?
In the past, once the Fed has started lowering interest rates, it's like, wow, look at how quickly they plunge. And so Eric and I are thinking that one of the reasons that the market is expecting so many rate cuts over the next 12 months is because it's happened before. Once the Fed starts lowering interest rates, it has to lower them dramatically. But I think, again, what that analysis misses is this credit crunch theory of ours. Not really a theory, it's just it's an observation, it's an empirical reality.
I mean, do you see the rate cut? See the rate cut? See the rate cut? And that's what the market wants. The market, like I say, is like a child, believe it or not, right? Now, of course, we say, but who is the market? Well, I don't know. It's all these people trying to get it on there and trying to somehow manage the information. Now, is the information managed? Because remember, right? While it's a good thing for the White House to say the economy is slowing down and we're great, it's also a problem, right? Because now the market expects for you to do something, and then for you to do something, we're really talking about our friends over at the Fed, right? So the Fed is part of the government, technically speaking, and if the Fed, because they also want a good stock market. So if the Fed does 50 bips and it says we have a recession, we lose the market. So that's not good for the White House. If the Fed doesn't do anything, it's going to be great for the White House because they're going to say, you see, nothing is going on. We're running a fine line, full of uncertainty, full of danger, full of night scream. So next, let's listen in to the people on the other side of the track, the one that says we are going to be in a recession. You have to be careful. Let's see what they say.
Let's drill down now on the August jobs report, which was weaker than expected. Payrolls at 142, below the 161,000 estimate. The unemployment rate, though, ticked down to...
I thought it was 165, but anyway.
4.2%. And according to data from online employment marketplace ZipRecruiter, online job postings are down more than 7% over the past year, but also up slightly in the past month. Julia Pollack is the chief economist there. Julia, it's good to have you. So do you think a slightly better tone in the past month to the labor market is for real?
I don't. I think the broad trend is that the labor market is slowing and slackening. And I think this report was not...
It's amazing. It's amazing that all these people are paying all that kind of money to basically say the same thing.
Reassuring. It was not very strong. We had these large revisions to the prior 2 months, and job growth is very...
Now, you will notice, look at carefully at this rate. This is the unemployment rate. As you could see, we are going up. I mean, we had the little tingling there from 4.3 to 4.2, but we're still going up.
Very narrowly concentrated. The number of jobs added in the private sector outside of healthcare was just 74,000 in the last 3 months. That's been around 30,000, well below the pre-pandemic average of 137,000 a month.
Even though you saw a ever so slight increase or uptick in job openings. So it sounds to me like you guys would more confirm the overall kind of downbeat signals we're getting from the official JOLTS measure.
Now, I got to say something here. Okay. Remember, I always tell you need to understand the player. Right? Who is this player? This is ZipRecruiter. So you've heard of them, ZipRecruiter. So they obviously know a bit about employment. So they're not so much... What's their game, right? If they keep telling you everything is great, they're going to say, well, what do I need you for, frankly? I mean, there's a bit of a bias, right? I mean, if it's an investment, if it's an investor, if it's a fund, if it's a hedge fund, if it's someone that makes a living by buying stocks and making money for people, obviously they want their stock to go up. They want to keep telling you that, I know things are not so good, but things are going to get better, right? But in their case, in people that make their living in advising you, if they keep telling you that, you know what, I'm going to look at the positive side of things all the time, they're going to say, but what am I paying you $50,000 a year for? What is the point? Now, of course, they have a fiduciary duty. They're not going to lie to you. But, I mean, they could. Why is it that Yardeni, right, that we see just before, he sees things a lot more positive? That's why I like him better, because he tends to be more, wholesome, not to try to drum business. He's called a couple of things in the past that went bad. Now he's positive. So, and frankly, you get a lot more views, I hate to say and bring this up, if you say that things are not doing well, quite frankly.
And so forth.
Yes, and we just computed our job seeker confidence index today. Job seekers registered the lowest levels of job seeker sentiment that we've seen in the history of our
job seekers sentiment is low. Yes, I know. I mean, I have students looking for jobs and they can't find them. But is it because they can't find them or they started too late?
Our survey, they're finding it harder to get a job. They are becoming less likely to negotiate their offers, more desperate to accept the first offer. So we're seeing clearly among job seekers that they're having a much harder time. Also, about that unemployment rate, it really didn't budge at all. If you look at the unrounded figures, it went from 4.25% to 4.22%. That's basically an imperceptible change. It was all.
So she's even going after the unemployment rate. She said, listen, people, I know you're saying it went from 4.3 to 4.2, but then she breaks it down to 4, but it's almost nothing. It's not a big deal. So it depends. If you want to see that the economy is doing better, you say, look, unemployment went from 4.3 to 4.2. It's getting better. She say, no, that's not what's happening. It's the same. Numbers are not changing. I'm going to bring that to 2 decimal points. Again, if you're going to say that the world is ending, people are going to want to know, are you sure when? If you're going to say everything is great, they say, well, okay, great, thank you, go back home. That's the truth.
Rounding that made it look like a rosy decline.
I think it's interesting because we talk about some of the inline rounding type areas. But one thing that we didn't see was a less significant move in terms of wages. It was actually decently significant. It was 3.8% year over year. That for right now puts it above inflation. Where are we seeing in the job market right now the gains being driven by? What sectors, what industries, what types of job seekers are actually getting paid more in this kind of environment as opposed to maybe nothing or less?
So we're still seeing about 5.5 million people being hired every month, right? This is a huge economy. It's very dynamic. And there
are 5 million people every month. And you can't find a job?
Are jobs to be had. But the demand for workers is quite narrowly concentrated in a few places. In healthcare, demand is strong for everything from physicians to physician's assistants to nurses to nursing assistants. We see huge demand in the skilled trades and for engineers, physical engineers, electrical engineers, industrial engineers. There's also tremendous demand in the government right now for police officers.
You seen this? WTI crude oil dips below $68. Right? So usually when you have a recession, oil energy tends to go up a lot. In this particular case, what are we seeing? $68. So you're not going to have too much of inflation. Now, of course, one could be said that lower, the price of oil basically is not so much a function of the supply, believe it or not. It's a function of the demand.
Teachers, for people in law enforcement. So there are definitely pockets of strength, and wage growth is still sort of normalizing, equalizing between unionized fields and public sector occupations and the private sector, where wage growth is continuing to slow.
Yeah, although, again, last month, at least in the BLS numbers, there was a slight improvement in wage growth. But to me, the more important thing, Julie, and the reason why we bring up the unemployment rate flat as it may be, is this concern kind of going to the beverage curve analogy that when the unemployment rate starts to increase, all of a sudden it's going to start to increase quite quickly.
Well, what she brings up, and that's true, once unemployment starts, and we've seen it in the past, it tends to rise very quickly. Is this what we're starting to see?
And we know when payrolls go negative, that's usually when the recession begins. And so all I'm trying to do is hold on to hope that we're not headed down that path. And so when I get a jobs report like this, I go, okay, it wasn't great, but we're not at that moment of accelerating weakness yet. And maybe there's hope that that moment may not come.
Well, there's a lot of reason for hope. Right? Real wage growth has been positive for over a year now. That is propping up consumer spending. Earnings season has been pretty good. Companies are doing well by and large. The issue is that, like, if you look at the Fed's beige book, if you look at a lot of the softer measures, they're great overall in the economy, but they're not very good when it comes to hiring. Consumer confidence rose, but the employment differential actually fell.
You see how difficult this thing becomes? Now we're saying everything looks great from the overall, but once you get into the detail, this is where it gets more complicated. This is nuts, right? Now, of course, it needs to be complicated. Again, who are the players? If it's very simple, she doesn't have a job. They have to make it complicated. They have to make it complicated so that you need them to explain to you what's going on, and you probably will need them. But understand who the players are, right? If you're looking at social media, if you're looking at network, look at all these things. People are like, well, we're going to die, the recession. And think of it for 1 second. Let's just say we have a recession. Practically speaking, what's going to happen to companies like Tesla and Ford and GM? What, are they going to close their doors? Right? This is not a depression. I feel like we're going into a depression. Everybody's going to be in the street with no jobs. It's not like that. What's going to happen? You just have a slowdown in the economy, in a recession. If you have a recession, not I'm saying you probably. So at the end of the day, there's not much going on and not much to see here. It's just going to slowly go down and then stop. So people, please, we've got to slow down the talking because you're upsetting the children.
In the ISM services number, we saw, fairly weak, but still expansionary figures for services overall, but not on the employment side. On the employment side, we're basically at stagnation. And so the issue is that the labor market is cooling. The beige book was just full of anecdotes this week about companies delaying hiring, pausing hiring, slowing hiring because of uncertainty about the future path of rates, basically, of interest rates.
Yeah, it's interesting because
well, they shouldn't be worrying too much the future of rates because we're going to lower the rates. So everybody's basically asking for the Fed to lower rates. The only issue that I'm worried about is that if somehow there's a political component in this, that is a concern. If the Fed somehow, the powers that be feel that Harris is going to lose, they definitely do not want to hand a great economy to a Donald Trump. Will that play into consideration? All the Fed needs to do is, I'm doing 25 bips. And then the market's going to say, oh, great, so rates are not going down, so we should be good then. But maybe you need to lower rates to avoid a recession later on, and you know that, and you're not doing it. It's very tricky, very tricky.
For interest rates seems a little bit more certain these days.
Well, the good news, at least we're talking about different topics and we're trying to understand what's happening. But you have to realize what's really going on. But before I go on into more of a detailed talk, I got to bring up this video because sometimes I fear that they think that investors or people in general are just children, right? Listen to the question.
Since when does the vice president have what sounds like a southern accent?
I have no idea what you're talking about.
Well,
I mean, this is.
she was talking about unions in Detroit using one tone of voice.
Is this something that
same
you think?
line?
Okay, Peter.
That she used the same line in Pittsburgh, and it sounded like she at least had some kind of a southern drawl.
I mean, do you hear the question that I mean, do you think Americans seriously think that this is an important question? They care. You know what they care about? They care about the economy. They care about.
I mean, I guess from a political perspective, you could make a point that blah blah blah, but if you're gonna you need to ask them about what are you going to do, what are you going to do about the national debt, and obviously they don't ask these questions, right? They don't ask these questions, and I guess that's why you need channels like mine to kind of put it on the perspective. Otherwise, you're going there, you're going to get slaughtered. Remember, this channel is about education. This channel is not trying to predict the market. We're simply trying to show you what is really going on, right? So that you're not out there trying to keep up with what's going on, try to understand why there's nothing to be understand, because that's how things are. That's how they are. That unfortunately, that's. I mean, that question is just crazy. Okay, so let's recap a little bit. Let us recap to try to understand what is really going on. Okay, so the job market basically slowed down. Okay, the job market slowed down. They were expecting 165, they got 142. So now obviously everything is upset because they're saying, you see, it is less than we were expecting. It was less than we were expecting, therefore we're in big trouble. That is not true. I mean, at the end of the day, actually the unemployment went up. Unemployment rate went down from 4.3% to 4.2%. That is not a lot. The question that is developing right now, is what is the Fed going to be doing? Is the Fed getting nervous? What do you mean by nervous? Well, how are we going to know? Well, if the Fed start dropping this rate to 75 basis points to 100 basis points, which that's the market wants, then it's going to be viewed as a recessionary environment. And therefore, the market is going to collapse even though rates are lower. You see, I feel that there's another game being played. This is 3-4-dimensional chess that they're playing. These people are playing 4-dimensional chess. What does that mean by now? Because you're thinking, we just want the rates to go down. Can you just lower the rates and we could go back and making money in the stock market? But they're saying, hold on a second. We've been up for quite a bit. Right, the P ratio, is pretty high right now, around 36 as per measured. If you use Chiller's P ratio, it's the highest it's been in a while. Maybe 2020, maybe 1999, and the last 1929 depression. So the market is pretty high right now. So let's take our gain. Let's bring it down. Let the people take the losses. Let's lock in our gains. Let them trying to fight it out and make a couple of dollars along the way. Let's bring it all the way down. And then when we're down, we bring it back up again. And because we bought at the low, obviously, and then we make the money all the way up again. That's what's happening here. And meanwhile, let the people buy at at 116, for example, with NVIDIA, and then end up at 103 and they lose more money, right? And then they say, oh, wow, I lost money. Okay, exactly. So let's play with the people a little bit, because what is it that you want, really? Do you want lower rates? Okay, well, they're going to give you lower rates. So now they are saying, well, I don't want too much of a high rates, low rates, because it means that we're going to be in a recession. Correct? So, and frankly, if I'm the government, if I'm Biden, if I'm the Democrats, I want to say this economy is doing just fine. In fact, yes, we are cooling, and we heard this guy, but we're not dying, and we're doing just fine, and things are gonna do a lot better than you think. Maybe that's what's happening. We'll see. But at the same time, because they want those lower rates, and the government says this is great. I mean, this is going to be good for us. There's also a push, right, to say, well, if you don't lower rates enough, you're actually going to put us in a recession. So you need to push the rates down more, knowing that if they do that, they're going to give them, because if you're on the right side, if you're a Trump, right, you want those lower rates. You want those lower rates because once you come into the office, you're going to have low rates. So it's going to, even if there is a recession on its way, you're going to eliminate the probability that there's going to be you see what I'm saying here? On one hand, and this is deep here, this is getting into a fourth-dimensional chess here, but basically, if you're a Democrat, quote unquote, and I don't know how they could, manage the market somehow. I mean, some of them have certain tendency, obviously, but can they move the market in such ways? I don't know, but let's see. But basically, they want the government not to lower the rates too much. The Fed. So that's good because it means that we don't have a recession. So we don't need to lower rates. So that's good. So for them, that's a good thing. And they were going to appear that, look, re-elect us because, I mean, there could be a recession coming after or not coming after, but they won't be around to see it, right? If they're there, and if they're there, they're already there. So this is too late. Right now, if you're on the Republican side, don't you want rates to be as low as possible? Yes. Why? Because you show these people are going to put us in a recession. So therefore, bring those rates further down, way down. And in case there is an actual recession coming in, and I'm actually going to win, I want low rates. At least I'm slowing that recession further with me. See the power that he has? That Powell has? And obviously within the Fed, there's some discussion as whether or not, what should we be doing here? Some people think it's too late, and some people think there's no issue. Now, are they thinking because purely from economic perspective that it's okay or it's not okay? But they're not thinking, if this guy is going to win, you know what? Let's not do anything. Because if you do too much, it shows that we're in trouble. So if you're Biden, don't touch the rates. It's just fine. I don't know. I don't know what they are going to do. I don't know. But so that's another layer that you need to be aware of. That's another layer that you need to understand. It is more, but obviously you cannot understand this if you haven't been taught to understand, what are the possibilities? What is it that they're going to be? Now, what does that mean for you, right? I mean, this is getting complicated now. Not only we have to contend with what these people say they want to do versus what they mean. Then we have to contend with all of these people trying to make decisions at the same time. And that's a lot. By the way, if you want to do what I'm doing with my trades, join my Patreon channel, and you're going to see. I think I made like 38% on a put, with the SPY actually. Take a look at it. You're going to see. I'm giving you all my trades, so you can see exactly what I'm doing. So there's no misunderstanding here, where I stand and how much money I'm making, whatever. So what do you do, right? I say, don't try to predict the market. Don't try to predict what these people are going to do. Trying to see what's happening from a bigger perspective. Trying to realize that there's a lot of volatility. Try to welcome the volatility. That is what you should be doing. That is what you need to understand. And that's okay. And that's okay because we're not going to know exactly what these people are thinking and doing. I hate to tell you. Right? So you don't want to be buying when everybody else is selling. Yeah? And right now everybody's selling. Right? What I mean is they're selling, but not everyone is selling yet. So maybe we have a little bit down further to go. The point is, the best way to take advantage of this situation when you don't understand, and you know that this baby is going to cry until September 18th. Today is September 7th. You have another not 11 days. You have maybe, I think you have the next week, which is 7 days of trading, right? And that is what you need to worry about. So what do? You take advantage of the market. How do you take advantage of the market? Play it both ways, right? Until September 18, every single news that sounds a bit negative, then they're going to say, that's it, it's a recession, and the market is going to tank. I mean, look what they did to NVIDIA. NVIDIA is kind of, if the baby is a crybaby, NVIDIA is a poster child for abuse, literally. They say, you know what? Your P ratio is down to 50, it was 56, it's down to 48 now based on 2024 earnings. Now, if you look at the earnings that they're going to do next year, which is going to literally double, then their P ratio is 25. What's wrong with 25? I mean, that's below average. No, we don't like it. It's too much. What are you talking about? The company doubled its earnings. I mean, this is amazing what they've done. This is fantastic. So please do not tell me that you don't like what they did, because they did a fantastic thing. So take advantage of it. Buy NVIDIA. NVIDIA is very cheap right now based on 2025 earnings. Now, of course, you're going to say, well, I want to get to I want to cash like at $50 a share. No, I mean, this thing is huge. Tesla. Tesla is doing some incredible thing with a robot. In fact, some of the robots are going to start building the Teslas. Imagine. They got robotaxi. That's his next thing, right? So a lot of opportunities with Tesla as well. A lot of opportunity with NVIDIA. But yet these companies get beaten down, beaten up, because now the market is pissed. I want my lower rates. Otherwise I'm going to break all my toys. And that's what they're doing. You got to be careful. You got to understand what's happening. But at the same time, you can't just sit on the sideline and don't do anything. You could literally make 50% in one day betting the right way or the wrong way. Now, what you can also do, you could also do day trading, but look at my video from yesterday and you will see, I showed you a very specific NVIDIA trade, right? I show you the little corner. I said, look, see there, up, it's going to go back up. Just take advantage. But naturally you have to buy and sell on the same day. But at the end of the day, the goal here, what is the goal? The goal is for you to make money. The goal is to take advantage of the market. The goal is not to be taken out to the cleaner. Do not try to play four-dimensional chess with these people. You will not win. This is very deep, very complicated. Lots of players with different perception and different goals and different everything. So just be careful. Understand what's happening, right? Price risk versus credit risk. What do I mean by that? Well, and I'm guilty because I'm showing videos of talking about price risk, right? Because the price risk has to do basically with the recession, right? The recession comes in, company must make less money, their credit is impacted. We always try to link the price risk with the credit risk. And the price risk is really the fact that the stock is going to move around its average. I don't want to get too technical, but the price risk has to do with the fact that it's going to move on its own. Think for example about the weather. How do you know what weather is going to be tomorrow? Do you think we go and fly around the sky and see where the clouds are and taking pictures? No, it's purely statistic. We're trying to evaluate where the weather is going to be based on what it has gone and what it has done before. So, I mean, like if you're in a classroom, right? In a classroom, people sit always in the same place. Why is that? Well, because it's human nature. You know, it's the pattern into everything. You're not crazy. You know, there's such a thing called entropy, where you go from order to disorder, right? We don't go from disorder to order, right? We look at it, entropy, E-N-T-R-O-P-Y. It's a real quantum physics physical concept. And basically it says that you go from one side to the other. There's a pattern into everything. You need to be able to detect that pattern. And if you're able to detect that pattern, then, but it has nothing to do with what the company does and whatever. It's the price behaves on its own, right? It's not so much there is a random, right? The prices are not moving randomly. Right? They don't do like crazy people, like here and there, and go up to 100, down to 2. No, there's a pattern. Take a look at the video that I did yesterday. You see it goes like that, like that, like that, like that. It follows the 50-day average and say, look what's going to happen with NVIDIA, and see what happened. You saw it live, and I show you that the price just went up with it. That is what you want to understand. You want to understand what price risk is about. And that's the way to do it. And once you do that, then everything opens up, and then you're looking at it the way I look at it, that it's not about recommendation or it's not about prediction, it's about understanding. You need to understand the world that you're living in. You need to understand what's happening. You need to be educated. And that's what this channel is about. This channel is about education. It's about explaining to you what's happening, explaining to you what they're saying, explaining to you what they're doing, explaining to you why the stock market is moving. But it is not an easy thing to do. It is not an easy thing to do, but you need to do it if you want to make some money, like everything else, right? If you're going to buy a car, you need to understand what you're buying, and this is what it's about. So let's do this next time. Let's make sure we grasp all of the concept that we're in. Let's make sure that we really understand what we are doing.